Wow, what a difference a few weeks can make in the investment world. Since our 6-month reports in October, investment markets have continued to reach record highs, and our client portfolios are following the same trend. Over the last 12 months, the New Zealand market has increased by 16%. This sounds impressive until you compare it to the US market, which has increased a whopping 30%, and the technology-focused NASDAQ has added 33% since December last year. We do caution that these numbers should not be taken in isolation, as last December was actually a low point after investment markets suffered from rising interest rates and rising inflation in 2022 and 23. As interest rates and inflation now appear to be back within the target range for most countries around the world, economic confidence has increased. We expect this positive momentum will provide support for investment portfolios over the coming year. The election of Donald Trump to the White House is something of a wild card for investors. Initial market reactions have nicknamed this the Trump bump, as markets increased by 3% on the day after the US election. There are certainly some sectors of the economy that will benefit. Tesla shares are the first that come to mind. Tesla shares increased by 15% immediately after the election and show no signs of slowing down. There are, of course, a number of wildcards for investors to consider. Policy decisions from the Trump administration could have an impact on worldwide inflation. This would see investment markets retreat from current levels. Others include the ongoing war in Russia, the Middle East conflict, and the recovery, or the lack thereof, in China. We are, of course, watching these topics closely and engaging with our fund managers to understand the impact for investment portfolios. Closer to home, the New Zealand economy is still struggling. We are recording this video before the November 24 Reserve Bank of New Zealand official cash rate announcement. At this time, the predictions are for a 0.5% decrease to interest rates. However, there are a number of commentators calling for 0.75% decrease. Either way, interest rates are coming down, which will help ease the cost of living crisis and take pressure off the everyday consumer. To round out this video, in 2024, let's ask Father Christmas for 3 gifts. Number 1, after an exceptional year of portfolio increases, we would be happy for some steady growth in 25. Let's call it 7 to 8%. That would make us very happy. Number 2, world peace, because life is just too short for war and conflicts. And number 3, health and happiness to all. So from the First Capital team, we wish you a very Merry Christmas and a Happy New Year.